what if success were something shared? And what if sharing success were good for business? Good for navigating today's economy? Good for everyone. At Southshore Bank, we comes before me. Because as a mutual bank, we reinvest profits for the benefit of all. That's what it takes to support local businesses and the communities we share. That's what it takes to succeed.
We're a mortgage banking firm, mortgage brokerage firm. As I mentioned, I'm the managing director of the Northmark Regional Office. We represent a pool of about 50 life insurance companies and pension funds where when we place loans for them, we service them after the fact. We're also a direct capital source for the agency lenders, Fannie Mae, Freddie Mac, and FHA. And we maintain relationships with local banks, local regional national banks, private debt funds, Wall Street firms, you name it. So we help our clients with capital, mortgage financing, debt and equity solutions for income producing real estate. And I'm happy to be here this morning. Thank you.
Great. Thank you, Michael. And I just wanted to mention to everyone that we are streaming this also on Facebook. And this will also be recorded and will be on YouTube. So we'll move on to Dave Ellis of Ellis Realty Advisors.
Thanks, Rick. Good morning. I appreciate being here. I'm channeling my my own Rick Kaplan for Movember, a little initiative that we're doing for the company. So won't get to that level for a while, but I'm Dave Ellis. I'm with Ellis Realty Advisors. We're a full service commercial real estate firm based here in Southeastern Mass. We do leasing, sales, development consulting for office, industrial, retail, multifamily, hospitality properties. And last year, we actually started a full service property management division to our company. So in the midst of the pandemic, we saw an opportunity to expand into that service line, and it's taken off for a lot of our clients and a little bit of a value add. But we're excited to be part of this this discussion and panel, and looking forward to some questions and some engagement here.
Thank you, Dave. And just so you know, this mustache has been since I was 14 years old. And, you know, at 14, when you wanted to go into a liquor store, you know, you had to have a mustache. Let's move on to Stephen Dupree from Southshore Bank.
Good morning. And again, Rick, thank you for having me. I'll be brief. I'm the Chief Commercial Banking Officer here at Southshore Bank. Southshore Bank is a $2 billion mutual community bank headquartered here in Weymouth, doing business all across the South Shore, Greater Boston, and Southeast and Southeastern Mass. Really, as I like to say, anywhere kind of south of New Hampshire and somewhere before you hit Connecticut in that group. We have a really great team here. Our CEO, Jim Dunphy, not only is he both born here on the South Shore, but very active in the South Shore community, really a good example for the rest of our teams as well. So we are, again, very active in the commercial real estate, all aspects. We have a very robust construction group that has brought forward anything from residential condominiums, buy and hold apartment buildings, as well as single family development and condo development, all the way through our owner occupied, which we all do love to see when companies expand and move and bring jobs into the marketplace, as well as our traditional apartment buildings and investment property practice. So we have a full service group. So we're very active in all facets of real estate that I hope to be discussing today. And seeing David and certainly Tabor and Michael are all partners of ours as we kind of live in the ecosphere of kind of real estate, which is a very broad topic, and lots of great partners that we work with in the market at all areas of the lending. So happy to be here, and I will not be growing anything, but happy to donate. So Dave, send the link. I've already hit a few up. I I wouldn't do it to people to see what I look like after a month. It's probably not much different than this.
Holding you to it, Steve.
Yeah, so thank you.
Thank you, Stephen. Now we'll move on to Tabor Keeley of Donahue Associates.
Thanks, Rick. So Tabor Keeley, Donahue Associates, I want to say, first off, thank you very much to Michael for thinking of me and as a stand-in for the legal end of things here. I appreciate your thinking of me. Donahue Associates has been around for about 40 years, and I think I've been here for probably just about 30 years. We are commercial industrial real estate brokerage south of Boston. We go from roughly the Dorchester Hyde Park area down to Rhode Island and to the Cape. Not a big outfit. There's 7 of us. We stick to our knitting with the industrial and the commercial. A little bit of hospitality here and there in development, but we stay out of the residential, and the leasing tends to take over when the market is good for that, and then the sales end up supplementing that when the market turns. I would say that at the moment, our business is primarily emergency management of for the lack of space and the emergency look for, especially the industrial and warehouse. The market has just been the supply chain thing has really blossomed, and it's gotten to be quite serious. Landlords seem to be raking it in, and they're enjoying it, but this won't last forever. And it's really it's killing the tenancies and those that anybody that wants to expand. There's just almost no expansion available. So it's been an exciting time, although somewhat depressing at times too. But thank you for including me on this panel.
Thank you, Tabor. Before we begin, I'd like to also remind everyone that if you want to stick around after the panel, we'll have a short period of networking that anyone that wants to participate, they'll turn on their audio and video, and they can join us, and we can introduce you and, go from that point. So I want to again thank the panel for joining me this morning for the Southeastern Mass CRE webinar, which Southeastern Mass, we all know, is the whole South Shore. So let's begin with Stephen from Southshore Bank. In the housing and multifamily in versus the industrial developments, are you seeing a proportionate growth in the Southeastern Mass?
Yeah, and I think, Rick, as far as growth, it's almost everywhere, right? So I think number one is there's just seems to be growth in all pockets, but where we are seeing extensive growth, and I think you could look all around commuter rail, places where there is other MBTA access, even if it's bus lines, but really looking down the southeast, you have anywhere where there's commuter rail. If you go through Attleboro, Mansfield, Canton, you'll see extensive multifamily developments, and specifically here in Weymouth, we're lucky enough to be part of a project that sits, I would say you could probably really push about how late you want to or how early you can get to work by maybe a minute to get to the train. And that's really, really what I think many tenants are looking for. They're looking for amenities. That's number one. So what we're finding, our clients know the markets really well, and our potential clients. So a lot of this information is done in the research early on, when they decide to pick whether it's a purchase or if they're going to develop a ground up. And I think it's unfortunate Barry can't be here because I like to talk about how early that planning begins. But over the last 5 to 10 years, transit has really dictated where multifamily housing, whether it's density, but access to commuter rail, access to red line, access to the green. We know the green line's expanding, but focusing here on the southeast, we're really seeing the majority of multifamily housing development, not so much the single family townhouse style, multifamily being centered around transit. And that goes all the way down to Rhode Island. So the closer to the commuter rail, closer to Amtrak, closer to the red and green line or orange line, is really where we're seeing a lot of the activity. And like I said, we're very proud to be a part of a project right here in Weymouth that sits almost abutting the parking lot of the commuter rail, which, for today's purposes, we've been in somewhat of a hybrid model in the COVID era. So I think, but we all need to know that, access to the commuter rail is critical. We've all been on 93, we've all been on 95, we've all been on 24. Maybe for a couple of weeks during COVID, we felt pretty good about driving. That is now back to traditional. And so you're going to see continued development focused on transit.
Thank you, Stephen. Anyone else that has anything to add to that?
I would have to agree. I think and I wouldn't say it's limited to just transit, but the infrastructure in general has been a huge eye opener, especially now that we're reportedly coming out of COVID. Although I just got my booster shot the other day, and they're claiming that this is here forever, and so I think there's going to be a change in our attitude toward certain things, and the commuter rail and subway system is definitely going to suffer for it with the reluctance to crowd together. But I think the lack of roadways for the vehicles, for the trucks, et cetera, is just making public transportation all the more important. And I do a lot of representation now in a number of areas. For instance, the Avon Industrial Park. There's no bus transit. There's no sewer. They did just put sidewalks in a few years ago, but honestly, it's right out of 1968, and it just isn't the right planning. And a town like Avon doesn't really have the wherewithal to do that work and that planning. And so I think it's going to be interesting to see whether or not there are a number of larger planning groups and agencies within the state that steer federal dollars, and whether those are going to be going towards some of these industrial parks to allow better access for trucks. And I think, trucking has not been, sorry, the motion sensor here is killing me. The trucking industry has gotten a lot of play recently, with all the stuff in the shipping lanes. And I think it's been brewing for a long time. Ever since deregulation, it's really been, the market for truck drivers has been tough. And most of these smaller industrial parks that are crucial for Boston do not allow, a lot of that access to Boston. And Avon or Weymouth or any place that's just on the edge of Route 128 and then that access to Boston. I think the planning that needs to be done at the state and federal level is playing catch up, but it's evident now with the traffic booming back. And if you've been on the commuter rail lately, or if you've been on the subway lately, you've noticed that there aren't that many people riding. So it's going to be interesting to see how we can get that back in order. And I don't know what the solution to that is.
Thank you, Tabor. Anyone else have anything to add to that?
Yeah, just to add on to that, and obviously transit's definitely key to development and having access to transportation in some of these areas, and in some of the projects that Steve was citing, close proximity to commuter rail and Amtrak, and but above and beyond that, you need to have the right mix of zoning. There's some political nuance to some of the zoning, and specifically using Weymouth as an example, Steve. You had a overlay district that was kind of created to encourage certain projects, and these towns and municipalities, cities, they need to come up with good planning and zoning strategy to come up with the right mix of projects, encourage development, and that way you're going to see those types of beautiful projects along those areas of transit. That have to make sense, and you have to offer amenities, and you're seeing a lot of mixed use being incorporated into a lot of these projects, where sort of a live, work, play environments, and where you don't really have to leave. You don't have to get in your car and drive 3 miles to get to a shopping center or a restaurant. You have it very close. It's walkable. So we're starting to see a lot more of that as the housing is kind of taken off. But at the same time, there's definitely a housing shortage in Southeastern Mass, and the supply needs to catch up with the demand. So we're seeing a little bit of that come in and through zoning in different towns. And you look at cities like Quincy that have been encouraging development over the last 5 to 10 years, and so we're seeing it happen in those kind of hotbeds. Some of the municipalities, as you come out of the city and the suburbs, haven't really caught up with the demand and the regulation, the zoning, to encourage more development. And they're also, just to add on top of that, they're hampered by infrastructure. I was going to talk about infrastructure later, but water, wastewater, Tabor touched on it, in Avon, for instance, and on the industrial side. But as you get down, Route 3 corridor, for instance, I mean, we just don't have, access to water, wastewater infrastructure, which is very limiting for development. So I'll expand on that a little bit more.
Okay. So Michael, you have anything to add on that? Or?
Sure. I would say that right now, the two of the hottest asset classes, or the two of the primary asset classes, are industrial and multifamily. And the good thing about Southeastern Massachusetts is that it's well positioned and competes well in those areas relative to the rest of Massachusetts. If you think of as we all know, our market, our semicircle, I mean, you have north, you have west, you have south, east, of course, is the ocean. The asset classes are not evenly dispersed amongst northeast and south. Sorry, northwest and south. Suburban office, the Southeastern Mass is probably about 20% of the suburban office market, more of it concentrating in the west and to the north. But on the industrial side, depending upon which brokerage research firm you look at, Southeastern Mass has about 40% of the industrial market between warehouse and flex R&D. And I think we talked about during our prep call, we're starting to see more and more of redevelopment uses where industrial is becoming the higher and best use, as opposed to prior trends where, as populations would grow out from a population center, industrial might be converted to office or some other use. We're now seeing retail properties or office properties being taken down and replaced with industrial. So, the Southeastern Massachusetts having between 40 to 50% of the suburban industrial market, also having about 35% of the suburban multifamily market. Lots of projects underway being proposed, particularly in Quincy, but in other communities as well, Weymouth, down all the way to Plymouth. So again, those two being the primary asset classes, multifamily and industrial, and also being the two that are more concentrated in the Southeast, I think bodes well for that area of the state.
Thank you, Michael. And I should mention that, because everyone has mentioned Barry. Barry Crimmins was supposed to be on the panel, but he had a medical issue and he couldn't make it this morning. So we all wish him well and hope everything goes okay. So the next question was for Barry, but Dave, you hit on it a little. So we're going to continue with that, and you can give us your legal advice on this. We were going to talk about the permitting, the zoning, and new construction, or companies relocating into some of the small cities and towns in the Southeastern Mass area. Mm-hmm. Have you seen more streamlining, or have you seen the process moving a little better because some of these small towns are looking to start to redevelop or bring in new companies?
Yeah, yes and no. I think there's definitely a demand for these companies to come out of the city, and because they're getting replaced in the city by maybe a higher and better use, but they still have an operating company that needs to exist, and so they're looking towards Southeastern Mass as a potential opportunity or place to relocate. And so the frustrating part, and Tabor kind of touched on it a little bit, is supply, and there's just not a lot of existing supply in the market. So you almost have to look at development, and the challenges to development are, 3 or 4-fold. I mean, you've got supply of land, You've got construction costs, which have, skyrocketed. I mean, the cost of steel just in the last 12 months has doubled. The cost of lumber has gone up and it's kind of tapered down a little bit, but so materials. But I think from, to touch back, to the zoning, question, the challenge is you might have some areas where these companies want to exist, but there's roadblocks in terms of zoning, and these decisions are made at a local level. So there's a lot of, there's still a lot of NIMBYism and with some of these municipalities of not wanting, an industrial, project in their town for a variety of reasons, whether it's perceived traffic congestion, noxious, operations that would, hamper the residents. There's height restrictions. So there's a lot of barriers when you get down to the local level. And as much as you'd love to see some of this development, if you're looking for tax base and as part of these towns, politically, there's some challenges. And then, back to the infrastructure, question, some of these businesses have a requirement for, water, wastewater, and in a lot of these areas, you just don't have it. So you're stuck with more of the, logistical warehouse distribution types of uses, which might not, bring as many jobs or might just put more trucks on the road in your town. So those are some of the challenges that we're seeing. But to answer your question bluntly, there's definitely demand from businesses that are inside Greater Boston to come to this area.
So do you think it's like putting the cart before the horse, because you need those tax dollars to work on your infrastructure? And so how do they resolve something like that? Is it something the federal government has to step into?
I think it has to happen kind of regionally, and we've had some discussions. So I'm part of the Southshore Economic Development Corporation. We just did a site readiness report, which I'm not sure, I could probably share it with this group. But what it talks about is, there's a few ways to get access to infrastructure. You could try to, snake a line to the MWRA and try to bring it down, physically. But I think a lot of the resources, exist regionally. The problem is the decisions for water and wastewater tend to happen at the local level and not on a mass, state or regional level. So there's got to be some collaboration amongst some of these municipalities, and you see it in certain pockets. I mean, you have, Brockton working with Abington, working with Rockland, and just as an example. But you need to have more of that regionalization of infrastructure, and that takes time, because you've got certain towns want certain things on certain days, and that they don't always match up with your neighboring town and what they want, and the people that are making the decisions in those cities and towns. So I think it has to happen. There's got to be collaboration.
Anyone have any more to add to that?
I might just maybe make one point is, so what you're talking about, the old, best day to plant a tree is 20 years ago, second best is today. That's really what needs to happen. Is this, unfortunately, is here, it's here to stay. And you can't go back and say, we wish we prepped for this. And, I kind of made a few notes as both Dave and Tabor, and of course, Michael were kind of going through that, is speculation. This is actually the opposite of what you want, right? I mean, typically speculation was very difficult because you're really kind of in a high risk environment, really looking out to the future. So here we have the demand is here, yet we don't have the product, right? So it's almost an exact reversal of the problem that would come with a lot of speculation, which could create a whole nother shoot of problems. So for listening to Dave and Tabor, I actually, from the lending and banking side, we spend a lot of time on just demand and lowering that risk of speculation. So, when I kind of hear these challenges, and we've got them all: supply chain, availability, longer, and I have no physical reporting that has provided this, but I do believe Zoom and Teams is really good for these zoning meetings, but it doesn't replace what the historical was, the plans, an architect and everybody in the room together. On Zoom, it may not. So it seems to be things are taking a little bit longer. Using Zoom and other types of technologies to get through permitting and zoning. So, a lot of what we're talking about, one big part of the problem is solved is demand, right? So we could have a lot of properties available almost if you went back 10 to 12 years ago. I don't think we were too concerned about the amount of industrial space. We're actually saying, how can we repurpose that to housing? So the pendulum has shifted very much so. And again, I go back to, demand is almost as important as even having product, because if you had a lot of product and no demand, I think that's as big of a challenge that sometimes can be insolvable. So I think Greater Boston, Southshore, Southeast, and Massachusetts in general, and I would even expand that to New England, is a desired place for investment, and it's creating all of these other problems. So I maybe the optimist sort of seeing some of these challenges, but then also the banker who does prefer to limit future risk. So this demand may take some of that risk out of the formula and bring a lot more capital sources into the equation that may not have existed several years ago, which might have put us in this position. So it's interesting. So I'll turn that back to you, Rick. I know we've got a lot to cover.
And Keith, I think his last name is Singh. He had put up in the chat box a link to what you were speaking on. So anyone that wants to put their contact information, they can also put it in the chat box. And if you have any questions for the panel, please put it in the Q&A box. So does anyone have anything else to add on that?
I would just bring up the issue on the infrastructure and the permitting. The town of Stoughton has been fighting for 20 years to bring sewer to one of the Campanelli Industrial Park, and it's a park that I think is practically below sea level. It's all, when it rains, it floods, and so other than warehouse space, it's never been any good for anything else. And it's been 20 years they've been fighting to get it, and a lot of the neighbors want the same thing. Finally, in the last year and a half, voted for it. And I will say, back to Stephen's point, Zoom isn't perfect, but boy, does it get a lot more people to attend these meetings. Not always the people you want to attend the meetings, but it's it's really better to flush them out in the earlier stages, and then when they do get to the live meeting in person, they're actually informed, and they're not going off the rails on things that don't really make sense and don't have any bearing on the argument. So the sewer thing did come through for the town of Stoughton, and I think it's going to be a win for the Campanelli Industrial Park. And a lot of that kind of thing needs to happen. There's money available from the feds and through the state, but it's usually federal money, whether it's Old Colony Planning or Metropolitan Area Planning Council. I'm on the board at Metropolitan Area Planning Council, and we direct an awful lot of these deals that come to towns. And if the towns don't have the impetus to do it, it's not going to happen. Most of this demand, most of this higher demand is really pushing the towns to go out and get that done. And honestly, 5-10 years ago, industrial space, nobody wanted that. The average rent was $450, $550 a foot. Now those rents are at $10 a foot, and the office rents, because everybody discovered working from home, the office rents are probably down also in around that $10 a foot range. But the cost of the office building is 75-80% more. So it's a big difference to look at that. The realization that we're all subject to the whims of Amazon. And Amazon needs to deliver. And Dave probably sees this, but every time I get an appraisal hits my desk, the appraiser's comparable leases, it's got to be a third of them are Amazon deals. They're controlling the cost market. So it's, once the demand is there, it's really hard to keep up with it. But now that it's gotten there, the cost of materials and other things are not as big an issue because the rent is now there. If you don't have the rent, it's going to die. So as long as you've got that equilibrium, we can keep rates low. But with that high demand and low supply, those prices have gone up to a level where people now prefer that industrial or warehouse type of use because the lack of need for utilities. Most of the warehouses don't have to have sewer. The manufacturing does, but it's that change it's going to take a long time for us all to be comfortable with.
Michael, you have anything to add to that, or are you good?
I think it's been very well covered.
Okay. Barry will be proud of you all. He did a good job covering it. So Dave, we don't have a lot. Well, actually, I'm going to go to Michael first. Michael, have you seen more interest in property owners or corporations considering refinancing or for expansion at this time? And do you think the supply chain shortages will affect the capital investments in the market?
It's a great question, Rick. Certainly with the rates being where they've been at, which is historic lows, there's certainly been a demand for refinancing and just financing in general, acquisition financing. Earlier this year, the capital markets was certainly a risk-on mentality. We were doing a lot of bridge lending. The cost of capital in the bridge space was incredibly low. It was down to the 3s, whereas in prior cycles, it might have been in the 5s or 6s. Right now, the availability of capital is still very strong, particularly for multifamily and industrial. The institutional lenders are all hungry for that asset class, and they want to enter the Northeast, and particularly in Massachusetts. The agency lenders, Fannie Mae and Freddie Mac, they've issued their guidance for the upcoming year. Their allocations are up. They had $70 billion each last year. They're up to $78 billion each for next year. So they're certainly going to remain in the market and remain a driving force in that space. They're going to be a lot more focused on mission-driven goals tied to affordability and green. But still, there's going to be a strong appetite. And the banks, this has always been a very strong banking market, as Stephen will tell you. CMBS lenders, bridge lenders, alternative money lenders, they want to come into the market, but they often, if you've got a good, strong sponsor, you'll find a willing bank. The one trend that I'm seeing in the banking side is probably the delta between swap rates and on-book rates is probably narrowed down to where there isn't much of a difference anymore between a bank quoting you a swap rate or their on-book rate. But other than that, yeah, rates are still near historic lows. The Treasury's been bumping around recently. Although all the talk, the Fed announced yesterday they're going to be starting to take the gas off the pedal, taper up their asset buying program. Rates went up at the beginning of the month, but they've already settled back down. The 10-year Treasury settled back down. Most of the Treasury rate movement has been at the short end of the curve, the 2s and the 5-year Treasuries. But the good thing for borrowers is, while Treasuries are moving around, the corporate bond market has not become volatile and spreads have remained ultra tight. I think the corporate bond index is only BBB corporate bonds are only trading at on average of 90 basis points over Treasuries. So lenders are still going to look at mortgages as an attractive place to put their money. They don't have that alternative investment, corporate bonds to go put their money into. So for the time being, it's a good time to be a borrower.
Well, I'm sure a lot of people will be happy to hear that. Everyone's looking for money. So
yeah, and Rick, I would kind of add to that, because part of your question was about business expansion and people looking for money, and I want to be, also kind of give the other side of that is there's a functionality to expansion that is absent of rate environment, and so you have your investors, which again in the real estate world they have a lot of different sponsors, right? So an investor is looking at low rates as leverage, ways to leverage investment. An owner occupant, and you asked about business expansion, and Dave Ellis and Tabor would appreciate this coming from their bank. When clients approach us, part of our responsibility as bankers is not just to give them the best offer and the loan, is an owner occupant, so a manufacturer of a product that's been making a product in Massachusetts for 2 generations, and they're expanding. Their choices are limited. Number one is their family is not going to move to Kentucky or Tennessee, or so they have very limited option. They also want to maintain all of the employees that they have at their current location and expand. So family businesses, when they approach us and they talk about expansion, I'd go on record, we're being recorded, that the current rate environment, prices, they're factors, but they're not the deciding factor. The deciding factor is functionality. Where can you manufacture your product with the right amount of talented people that you can hire and still have your family business or your company's name intact for the 3rd and 4th generation? When you're factoring all of that, if the rate is 5% or 10%, if the current markets are down or up, they're going to make that decision on functionality of their business, because they're not necessarily tracking rates as a deciding factor. We're very different than the investor community that's looking at returns, looking at how to maximize leases. Even and again, I always speak to David and Tabor because this does happen occasionally. When a owner occupant, this is the person that's going to use that warehouse in Stoughton, does get an appraisal back, and it's not the value, it's not the price they're paying. Gee, why am I paying $2 million and the appraisal says 1.5, right? It's because you need to be in Stoughton because you want to maintain your business there, and that's not the driving factor of their decision. So when we start to look at decision making coming into play, again, rates is one factor. Low rates is favorable, and I think today it does allow them, but it's all about the functionality of that company's ability to manufacture that product. And that's why exactly when we look at the Southeast, 24, 95, the trains, you got to think about that employee base that lives in that area. Highly educated, diverse, highly skilled, lots of talent, and lots of places to draw from employees. So, pricing and interest rates are always going to be an issue. Sometimes they're in their favor, sometimes they're not. It would have been great to buy a building in 2010. I think everyone can agree. But maybe your business was not performing as well as it was performing in 2021. So even though prices were low in 2010, as Tabor brought out, the demand just wasn't there because the decision making was driven by functionality. So I hope that, again, as bankers, we tend to be advisors, and hopefully part of the decision making is to really remind all of our clients and borrowers whether is what their motivations are, what their goals are. That short term there might be some headwinds or some positive wins, low rates, but for the long term, functionality is one of the biggest driving factors. And I don't see a lot of those other issues, cost, supply chain, limit, and expansion, minus the number one that Tabor and Dave brought up is availability, finding the space.
I think Steve made some great points. In terms of demand for capital, one thing I'd like to point out is the SBA, which is a common source of capital for small businesses as they try to grow and expand. For the first time in their history, I believe, actually ran out of funds toward the end of their fiscal year as they approached October. They're back now lending. They're back recapitalized for the remainder of their fiscal year, but shows a little bit of the demand out there for capital for small businesses, especially as they're kind of making their way out of the recession.
Thank God for those printing machines. Excuse me. Yeah, we're great at printing more money in this country. Now let's go back to what Dave was originally talking about, was the infrastructure. But do you see an increase in companies relocating to the southeastern area? And the reason I ask is because the access to highways is very good going all the way down to Rhode Island. You have 24, you have 95, you have 495. I would think that would be a great attraction for new companies.
Yeah, yeah. I think to your point, I think that the majority of those companies are more logistics, warehouse distribution, like I was saying, and I think you see a lot of that in sort of like the like that 495 stretch, the Attleboro, New Bedford, like submarket going down towards Providence. I think it's probably one of the hottest markets industrially, in the country, in terms of new construction delivery and lease absorption. So I mean, you've got Amazon that just moved into Fall River. I think they put up 1 million square feet. I think in the last like 12 to 18 months, I think in our whole market, Boston market, I think there's been like 9 million square feet delivered total. So just to give you like an idea of how much that, but what the magnitude of that market and what they're seeing in terms of new leases and new acquisitions down in that area and relocation of businesses to that area. Because of access to transportation, because you're in between two large markets for human capital and people and workforce, you're seeing a lot of movement down that way. If you shift over to 24 and to Route 3, I think you run into the supply challenges and all the stuff that we've been talking about with infrastructure. But as you get towards Providence, you're seeing a lot of expansion in that market, and I'm sure Tabor can kind of speak to that as well.
Yeah, I'd say that you're right. The market for I think the market for new infrastructure, and therefore those contractors, I'm sure, Dave, you see it as well. The number one phone call I get is for those contractors that do utility work. Mm-hmm. And the MWRA has excess capacity. They can deliver more water, they can deliver more sewer. But has been a real reluctance on the town's side. Canton, Stoughton, Sharon, for instance, have been very reluctant to do that. Stoughton and Canton have connections. Sharon is now considering a emergency connection, but they only want to limit to a very small amount the amount of water they can deliver. The folks that are developing the Naval Air Station down there in Weymouth, that's now Union Point, that was way back I think when Lennar was developing it, they were touting it as a location for the pharma businesses that are out there in Cambridge and that are paying $80 to $100 a foot in rent. It seems like a good plan, but Weymouth can't deliver the water. And back and forth with MWRA, nothing was decided, but because of the tri-town decision-making down there, it seems like they can't get out of their own way. And it's unfortunate. Norwood won out. They have the water, they have the sewer, and Moderna moved there. They were looking in Canton. They were looking in other locations, but the Canton water, they could only deliver a fraction of it. And it's still full 100% MWRA sewer, but their town water was only supplemented by about, I think it's less than 50% from MWRA. So those kinds of limitations are out there. And now I think a few of the towns are realizing the cost of those decisions. Going all the way down 95, you've got a lot of places with sewer, but you go down Route 24, other than Brockton in the center, most of the rest of this stuff, or down to Taunton Raynham, you've got big gaps in there, lots of exits with on the highway with no sewer available. And without sewer, you're not going to get those manufacturers. And so you're beholden to maybe not the 1 million square feet down in Fall River that Amazon did, but it's the other guys that are out there, the 100,000 square foot supplier to Amazon. I mean, U.S. Postal Service just signed a 200,000 foot lease in the Avon Industrial Park. The average rent's $7.50 to $8 a foot in the park. They just signed one at $12 a foot. Now all the landlords are going, bless you.
Thank you.
They all want to know why they can't get $12 a foot. And it's because USPS is, aligned with Amazon. That's who does a lot of the Amazon delivery. And there are an awful lot of little guys out there that are only looking for 20, 30,000 feet that do specialized delivery for Amazon. But if Amazon isn't in the contract, these guys aren't paying those crazy rates, and therefore you need that kind of manufacturing infrastructure.
Yeah. The Amazon is really kind of it's presented challenges in the marketplace because you've got land sales and leases and lease comps that you can't achieve if it's not Amazon, right? It's this happened down in the Kingston area when they acquired some land on the Kingston Plymouth line at a very high land sale comp, and now everyone in the market thinks they can achieve close to $1 million an acre, and
Dave, it's your fault because you can't get that price.
It is my fault. It's my fault, Tabor. But you can't achieve it. It doesn't make sense to the rest of the market. So, but you have that on the lease side too. So, and you've got landlords and sellers that come after you for it. But to your point, with the infrastructure along that stretch, I think that's the challenge, because you do have access to transportation, you do have access to workforce. This has definitely been the biggest challenge in terms of attracting these higher and better uses to these areas. And real quick, just to add on to Steve and Michael's points about interest rates, because you've got $12 a square foot lease rates, and just the lease rates across the board have come up. The discussion of hey, we can get a mortgage at a much lower interest rate. Our cost of occupancy is half of what it would be if we went to the market and leased space. So that's putting in inflationary pressure on mainly industrial buildings. That is what we're seeing right now, and I'm sure Tabor, you're seeing the same thing. I mean, the values because of that have increased, I'd say 50%. Over a really short period of time, call it 12 to 18 months, because of that discussion. And because there's so little supply, there's bidding wars for buildings, which you really hadn't seen for a long period of time. There was no need to go build create new supply, because the economics didn't make sense. If you're getting $5 a square foot for rent, and it costs $110 to $120 a square foot to build it, and it just didn't make sense. Now you're seeing the equation shift, and these businesses, these operating companies are coming down, and users, like Steve was saying. And of course, it's all about function, right? But there is a cost, and there's an economic equation that goes into it. And everyone's looking to get in for the lowest cost of occupancy as possible. And if they can own something, all the better. So just wanted to add a little something to Steve's comments there.
Now, this is open to everyone. Do you see any kind of move for companies, development, new construction, multifamily, any of that towards the Rhode Island border? Because now you're eliminating some of the traffic. If you don't have to go into the city, you have access to downtown Rhode Island, Providence, or even TF Green easier, I would think. I mean, the traffic is still a little heavy in the Rhode Island market, but I don't think it's as bad as heading into the city. I don't know if anyone has any input on that.
There's a lot of input from multiple areas, but Rick, you nailed it. TF Green Airport and Logan Airport. Logan is a world-class facility, international airport. TF Green is growing and growing and growing. So again, but I wouldn't discount, as we move to that Rhode Island border, you got to factor in 495, which goes out west to what I used to call the technology belt, Marlboro, out in places where they had a lot of space. So technology companies went there in the 90s, 2000s, expanded, and that brings in the Mass Pike, right? So now you're going out into parts of New York, Connecticut. So that southeast corridor does allow, when we talk about I know right now we're talking about traffic and trucking. Rhode Island has always been really a market that does grow in tandem as Boston has grown. But really, one big item, I think the airports are important, that is now an opportunity. I think there's some large corporations in Rhode Island that, obviously Fidelity's commitment, when I began my banking career in Boston, Fidelity was a big employer, and what we used to call kind of the over by the mud lots and the, that part of Boston that nobody went to, and it was, which is today the seaport. But Fidelity moved out to Marlboro. They moved to Rhode Island and Smithfield. They built a massive campus. Citizens Bank has a huge commitment to Rhode Island, and CVS, which we know is a big winner in all of the healthcare and expanding. So Rhode Island does draw from Massachusetts as much as Massachusetts is drawing out of Rhode Island. And again, I just think the geography, it's really just 30 miles. I probably exaggerated, maybe about 40 something miles out of our kind of capital city as you're into Rhode Island. So the airports are key to me. I think the train, I think the highway access. But the number one piece is, I think, the ability for employees to navigate between Rhode Island and Massachusetts. I think you could have a household where a person works in Rhode Island and a person works in Massachusetts, and they could pick a place to live in, Canton, Mass. You can work in Boston, you can work in Providence. So, I think that you do see a lot of, whether it be professionals or also the skilled manufacturing, which as companies relocate down to Attleboro, use that as an example, Mansfield, which has the Cabot Industrial Park, which is an amazing park, Miles Standish down in Taunton. And it is employees coming out of Rhode Island, Southeastern Mass, all the way down to Fall River, due to that history Rhode Island had of, the skilled machinists. Rhode Island was world-class for its metals, its plating business, its jewelry business, which moved to overseas, first it was Mexico, then it was even further, then it was overseas. So there's this employee base that had been trained and are now repurposed into other areas. So, as we meet with our clients and they look to move, there's always that added benefit of when they find great employees. I think that's something that's been a challenge, not just in the last 18 months. It's been a challenge predominantly for the last 10 years or so. It is to, find skilled labor that can work. Once you move to Southeastern Mass, you almost open up an unlimited talent pool that could go in many different directions. So I'm a big fan. As a matter of fact, we had a client move out of the Seaport area down to Randolph. It was a public-private partnership. The employees are very excited. And while we haven't done any sort of demographic study, I'd be curious as they have new hires, where they're coming from. I can imagine when they were in the Seaport, it was very difficult to attract a new employee who didn't have access to the commuter rail. To the subway system. Today, where they are in Randolph, I'd imagine most of their employees are taking some bus, commuter rail, public transportation, but are also driving, which it's possible to drive to Randolph. It's probably impossible to drive to the Seaport at this point.
Okay. I guess no one has anything else to add to that. But, we talked a little bit about on our pre-call that we had about the life science industry, and we touched on Moderna being in Norwood. And one of the reasons was because of the, the water situation and power and things of that nature. Do you see any other life science type of industries moving? Because there's also manufacturing, there's warehousing, things of that nature that go along with life science. Do you see any movement on that?
I think it's slow. The cost of doing the infrastructure for a manufacturing facility, not necessarily public infrastructure, but the standard flex building that's air conditioned with lots of power and sewer and water, that building it out for a life science, you're talking big money. It's like building out a hospital. and hundreds of dollars a foot, which is a big commitment for somebody not associated with that neighborhood. I think there are a couple. Organogenesis has been down in Canton for years, but they initially went because they could get inexpensive space. It's on sewer and water. They're not a huge sewer and water consumer, but it was important to be in an area where they could attract the customers for that. And I think Moderna looked in Canton. They were looking in Westwood, and they ended up in Norwood. But Norwood gave them an excellent tax deal. And this time around, they just got it, I think, about 3-4 weeks ago for their new addition for 250,000 square foot addition, another TIF for their increment financing. And that's just a big thing. Canton's been giving them out. They gave it out to Reebok to get them in, and they gave it out to Duncan's to get them in. So it's been a big plus for a lot of these local towns to throw some tax incentives that way for attracting the businesses that they want.
Okay.
Yeah, just to add on to that, I mean, I know it's been ad nauseum, this whole discussion, but it really comes down to infrastructure. And I think Tabor touched on it earlier. You've got this huge swath of land in South Weymouth that you could potentially build, a life science, mega hub, but you don't have the water and wastewater. You're missing that infrastructure component. And I think the three towns would love to see the tax base come down there, and I'm sure they'd incentivize companies to do it, but you don't have that infrastructure, and then you don't have the critical mass to lead the charge and bring everything down this way. So as much as we love to see it, you're not. The other thing too is you've got the Cambridge kind of epicenter of life science, and because of logistically where Cambridge is on the other side of the river, and it's on the northern side of Boston, you've got the pull of the northern suburbs that really attracts the manufacturing and kind of the biotech and the life science away from Southeastern Mass. You just don't have it on the other side. So that's definitely a driver when these companies make decisions. But they're Tabor hit on it. I mean, it's hundreds of dollars a square foot to build these things, and you can't just do it on a whim. You have to be educated on it, and it has to make sense from a cost perspective.
Well, I would think at some point the infrastructure has to be built anyways because of the progress we have gone through. And, this is something that is going to be needed, whether it's some kind of a water processing plants that are being built in closer vicinity to the areas, or whatever they have to do,
Yeah.
But we're coming close to the end, and we have a question, and this is for Stephen or Dave would probably know the answer to this. It was a question on, does anyone know what the latest on Union Point is?
Happy to hop in, Steve, if you want, or if you want to add to it. But currently the master developer has changed. It's Brookfield Properties in concert with New England Development and the Green Companies who did Pine Hills, and so they're looking. I mean, obviously they're looking to figure out what the water wastewater infrastructure plan will be, but they're the latest master developer for the project, and I'm excited that it's in the hands of this group, and that it's got a great track record, got great experience, and I think they'll have some good plans coming down the line. I think that the majority of it will be multifamily development, which is much of the same that you've seen. I think the commercial development, as much as I'd love to see it in this as part of the master plan, I think it's going to be a little bit of a laggard. We talk about infrastructure, but South Weymouth has its own has its own issues in terms of logistics. You're between two exits. It's a little bit in terms of access. You do have commuter rail right there, which is great. But what you've seen over the last call it five years has been developers looking at the periphery of Union Point for development. They've gone outside of it, just on the edge, and that's for a host of reasons. One of them being the cost of construction. Any commercial development that happens, as far as I know, has to be union labor, and from a commercial development standpoint and construction standpoint, that increases the cost and makes some of these projects not meet the economic threshold where they need to be. So, Steve, I don't know if you want to jump in and say any more there, but you're right there.
You educated me, so I appreciate you answering that question.
So I take it you don't have more to add to that, Stephen?
Not anything more than how he described it.
I mean, they have done a tremendous job on widening and repairing the Route 18 roadway. I mean, that is much better.
That I can opine on. That has been, we're excited to see that investment, and as Route 18, which is an important corridor, really from 3 goes out, Abington all the way down, and Abington's growing. So it is an exciting project to see. And, along that 18, we're seeing development, and again, I think it's got to do with it's all a domino, and I think, Rick, I mentioned this in the pre-call as we discussed this. When I was a young banker, I was taught to look at where large corporations expand, and that tells you about demographic, and it tells you about, because their research, as everyone on this call can agree, starts many, many years ahead of when even a banker gets involved. And I like to say you could follow Whole Foods around, right? Kind of look, there's a Whole Foods on Route 18. That's a sign of the commitment and the demographic change that will happen. So it might not be any financial statement that you can report to and say that, but there was a time when it was Home Depot. If they were opening, that meant there was homeowners in the area. Or if you looked at a hotel, that meant there was demand for travel in that area. And, I think we haven't really talked about that aspect is, and we'll maybe have that later on, Rick, I know we're wrapping up, is you see some hotels opening. You might say, how's that possible? I thought COVID, so you do have to peel layers back from the headlines to really understand what's happening in the Southeast. Is while there might be a personal preference, business goes on, business continues. And, one thing about when we talk about industrial space and lab space, and is you have to be there. This isn't work from home lab space. This isn't work from home manufacturing or ramp or working with steel or even warehousing. So all of this expansion requires housing, and then, as David pointed out, the mixed use, the retail. Those employees, they want to go to the restaurants. They want to live close by. And as we talk about younger employees, they want those amenities that they're used to seeing in cities. Dense living, lots of restaurants. So, we're not yet ready to kind of say that people, you can go to Boston on a weekend right now. It's packed, and all you read about is the offices are empty. It's possible, some offices, but young people, middle-aged, empty nesters, and world travelers all want to come to Boston. It's a great city. We are kind of the hub of the spokes of Boston, and it just continues to expand out. And that's, as we talk about expansion, it's years in the making. Today there's some plan for the next 10 years that, Rick, hopefully you'll be hosting this group. We'll be talking about the next project that someone's coming up with today, because these labs are saying, we need that space. We need to be close to Harvard. We need to be close to MIT and all of the other people who rely upon those labs, whether you're a manufacturer of a filter that they use in the lab, your business is growing, but you can't move out of Mass because you need to get the filters into Cambridge. So how do you do that? You know, that's what we're going to probably continue to try to solve for the next 5 or 10 years as these labs are being built very quickly, but they're going to all be on-site people. These are not remote workers. Now, I don't understand what happens in those labs, but I do know they're coming here for a reason, is to be close to the education community, which has been our hallmark for as long as I've been around Massachusetts, is education. And so it's really exciting. And, you know, when I think about Moderna, Tabor brought it up about the town and the tax. You know, I also, in a kind of circle it all back, if you're in Norwood, you can be on the Amtrak train and be in Washington, D.C. in a few hours. I don't know how long it might take. And I'd imagine someone like Moderna must have to deal with government agencies. And right now it's all Zoom and right now it's all online, but meetings are taking place. So I'm excited about our kind of access to all these areas and the investment that's happening because they're all related, you know, so.
Thank you, Stephen. And, you know, we basically were talking about the Southeast and Weymouth has now become part of the Southeastern area. So like we said at the beginning, Southshore is anything south of Boston. That could be Foxborough, it could be Plymouth. So it's a wide span. So we did talk about all that. We're running out of time. I just want to see if I could get anyone's last comments. I know, Stephen, you just pretty much summed up the last comments, but does anyone else have any kind of short last comments that they want to put into this? Plenty. Great.
No, I think we covered a lot here, Rick, and,
Yeah, we did.
this has been a great panel to be on, and I'm excited to you know, and I think other than Michael, I know Tabor and Stephen, we collaborate on stuff, and hearing their opinions and the stuff that they see is really important. But I think, you know, there's got to be some more of these sort of discussions in other forums. I mean, I think you know, we talked about it earlier. Collaboration is huge, and I think, you know, having discussions with Metropolitan Area Planning Council, Old Colony Planning Council, some of these groups are there to kind of assist and you know, be a catalyst for these discussions that need to take place amongst towns and regions, and we need to have them, and everyone's going to have their opinion as to who's right, who's wrong, but I think there's clearly problems that need to be solved at a much higher level. And I'm excited that we've got a group of companies and business people that want to be part of that discussion, including myself.
Anyone else? Okay.
I'll ditto everything I said earlier. I agree.
Great. Thank you, Tabor. Thank you, Tabor. Tabor Keeley from Donahue Associates, Stephen Dupree from Southshore Bank, Dave Ellis from Ellis Realty Advisors, and Michael Chase from Northmark. I want to thank you all for participating today. I want to thank everyone for joining us. I also like to mention that we have a Construction Trends webinar, a virtual conference, whatever you would like to call it. That's coming up on November 17th. We'd love to have you join us on that one. And also, by popular demand, the New England Real Estate Journal radio show, which I did for over 4 years, we are bringing it back. And that will be starting the mid-November. We'll start our first show. It's going to be a podcast. We won't be on a radio station anymore. And that we're taking applications for anyone that is interested in being a guest on the show. So if you're interested, please email me at rkaplan@nerej.com. And now I'm going to, anyone that wants to join in our networking, we're going to do that for a few minutes. But while I'm switching everyone over, I am going to put up a PowerPoint with thanking our sponsors and our speakers, as well as our major sponsor, which is Southshore Bank. So stay tuned, and I'm happy everyone joined us, and great panel. Hope to see you at the next one.
What if success were something shared? And what if sharing success were good for business? Good for navigating today's economy? Good for everyone. At Southshore Bank, we comes before me. Because as a mutual bank, we reinvest profits for the benefit of all. That's what it takes to support local businesses and the communities we share. That's what it takes to succeed.